in 2025, we think everything is now becoming synthetic or tokenized, not synthetic. So as we move not just dollars onto the blockchain, which is stablecoins, but we'll move stocks and real estate. Dollar dominance is going to be the opportunity of Ethereum. So digital gold is Bitcoin. And so in that world, we believe Ethereum could flip Bitcoin, similar to how Wall Street and equities flipped gold post 71. Now, that is just our working theory because I am still a Bitcoin bull. So I'm very bullish on Bitcoin, and I believe your targets for Bitcoin are actually reachable. So we think Bitcoin fair value should at least be 1.5 to 2.1 million.
As Wall Street turns its gaze toward blockchain in 2025, legendary strategist Tom Lee believes Ethereum is poised for its biggest breakout yet, one that could reshape the balance of power between Bitcoin and the rest of the crypto market. Tom Lee, co-founder and head of research at Fundstrat Global Advisors, believes 2025 marks a defining year for Ethereum and the broader blockchain ecosystem. As Wall Street and regulators warm up to blockchain-based finance, Lee says this shift could spark a new wave of institutional adoption. He calls the rise of stablecoins the ChatGPT moment for crypto, highlighting how firms like Circle and Tether, now valued at roughly $500 billion, prove that crypto-native financial models can outperform traditional banks like JPMorgan. Lee draws a historical parallel to 1971, when the US left the gold standard and Wall Street's innovations cemented the dollar's dominance. He argues that tokenization will do the same for Ethereum, making it the foundation for a new financial era where dollars, stocks, and real estate move on-chain. This, he suggests, could even allow Ethereum to surpass Bitcoin's market dominance, similar to how equities overtook gold. Still, Lee remains bullish on Bitcoin, projecting its fair value between $1.5 million and $2.1 million, while envisioning Ethereum reaching $60,000 per token. With Bitcoin's market cap near $2.17 trillion and Ethereum's at $476 billion, he believes the race for dominance between the two is just beginning. If you found Tom Lee's vision for Bitcoin and Ethereum insightful, drop your thoughts in the comments, share this with fellow crypto enthusiasts, and don't forget to subscribe for more market updates and expert analyses from the world of digital finance.
In Ethereum, I think the moment is really this year, because this is the year that Wall Street governmental regulations became friendly to think about rebuilding on the blockchain. And part one, of course, was the stablecoins, and stablecoins have really been the breakout hit in crypto. We coined it as the ChatGPT moment for crypto because it has become a breakout product, and it has created two enormous companies. One being Circle, which I know ARK was an anchor investor in the IPO, and the other is Tether. Tether today is raising money at a $500 billion valuation and roughly 300 employees. That's about $1.7 billion of market value per employee. JPMorgan, who just $869 billion, has 313,000 employees, or 2.8 million of value per employee. Tether is showing you a crypto native bank is fundamentally vastly more profitable. And that's what I think is happening on smart contract blockchains that are neutral, like Ethereum and Solana. But it really only could have started in 2025. If I could rewind a little bit to 1971, in our chairman's message last month, we addressed how gold versus Wall Street grew post 1971. So 1971 was when Nixon formally withdrew the US from the gold standard. The immediate beneficiary was there was demand and a market to own gold. And so people would say that was your, first implication. When what we talked about in our message was that in 1971, the dollar became fully synthetic because it was no longer backed by anything. And so there was risk that the world would go off the dollar standard. So in stepped Wall Street to create products to propagate the future of Wall Street, including, and we listed, I think, 14 products that emerged over the next decade, from money market funds to credit to mortgage-backed securities to futures, etc. And dollar dominance by the end of that period went from 27% of GDP terms, but to 57% of central bank reserves and 80% of financial transaction quotes. So Wall Street created products that made the dollar dominant, and the market cap of equities today is 40 trillion compared to 2 trillion for gold. So in other words, gold is 5% of all available assets. And so in 2025, we think everything is now becoming synthetic or tokenized, sorry, not synthetic. So as we move not just dollars onto the blockchain, which is stablecoins, but we'll move stocks and real estate, dollar dominance is going to be the opportunity of Ethereum. So digital gold is Bitcoin. And so in that world, we believe Ethereum could flip Bitcoin, similar to how Wall Street and equities flipped gold post 71. Now, that is just our working theory because I am still a Bitcoin bull. So I'm very bullish on Bitcoin, and I believe your targets for Bitcoin are actually reachable. So we think Bitcoin fair value should at least be 1.5 to 2.1 million, but we can see higher values. But that would, of course, provide upside to a neutral smart contract platform where a lot of Wall Street will innovate of real world assets. I believe Microstrategy will be one of the largest companies in America because of its Bitcoin holdings. So it's about 100 billion market cap today, 15 billion of debt, so 115. If Bitcoin goes to 2 million, then that's going to be a $2 trillion company. And it's because of its holding of Bitcoin, no different than an oil company. I think Ethereum can reach 60,000 per token in that world. And that would proportionally benefit the DATs because Ethereum's around 4,500 today. So a 15 times increase plus the NAV expansion. So there would be a lot of upside in the existing Ethereum treasury stocks in that world. And many would become multiple hundreds of billions of dollars of market cap.
As market volatility shakes the crypto world, Tom Lee sees opportunity where others see fear, calling Ethereum's recent price drop the perfect setup for the next major supercycle in blockchain finance. Tom Lee believes Ethereum is entering a powerful supercycle phase despite recent market turbulence. The crypto market recently faced one of its largest deleveraging events, putting short-term pressure on ETH prices. With open interest in Ethereum now at levels last seen when ETH traded near $2,500, Lee views the current dip as an attractive risk-reward opportunity. Reflecting this conviction, his firm recently acquired 203,826 ETH, boosting total holdings to 3.24 million tokens or 2.7% of Ethereum's total supply. Lee emphasizes that while corporate blockchains will always face skepticism for being centralized, Ethereum's unmatched uptime and resilience make it the most trusted foundation for a 24/7 global financial system. As tokenization, real-world assets, and prediction markets expand, he says innovation on Ethereum's Layer 1 and Layer 2 networks will be critical. Drawing from his leadership at BitMine, which has grown into the world's largest Ethereum holder, Lee notes that institutional confidence in ETH continues to accelerate. He believes this momentum positions Ethereum alongside Bitcoin as a cornerstone of the next generation of digital finance, one built on transparency, scalability, and decentralized trust. Let's get back to the interview.
Corporate chains are always going to be viewed as fat fingers. Someone's fat finger on the scale. And that's just how Wall Street operates anyways. If some bank created a layer 1 blockchain and they're the oracle, we know that they're tilting that in their favor. And of course, the second is that all blockchains are basically databases, and the security model becomes a question because it's either a centralized chain, which isn't really a blockchain, or it's got a security model that can be exploited. And we know there's so many high profile hacks that have taken place. And uptime is a third dimension because, as you know, that is one of the prominent features of Ethereum, that its entire history, resilience was an existing feature and has never had any downtime. And I think that that's important when we're thinking about a world of high-speed transactions in a 24/7 world. I think a lot of creativity needs to take place on layer 1s. And, to me, as we think about tokenized world and using prediction markets, a lot of that thinking is taking place around building on layer 1s and layer 2s on Ethereum. But a broader statement I'd make is I don't think one blockchain can hold the entire financial system anyways, because let's say your 27 trillion is correct, and I believe it is even conservative, because today global GDP is 80 trillion. And we know GDP is an imperfect measurement because it only measures final sales. So let's say it measures 120 trillion of gross activity is what 80 trillion is measuring. Financial system ledger is 120 trillion on the other side of that. If just half moves onto the blockchain of the financial transaction, that's a 60 trillion market. Plus, we know that as you tokenize loyalty and IP, things that are GDP measurements but not financial markets, that's also on the blockchain. So maybe the total, what's ends up on the blockchain is 60 plus 20, 80 trillion market versus your 27 trillion. That cannot fit on one ledger. 3 months ago, so 12 weeks ago, I became chairman of BitMine version and led a transformation, as you point out, where the company went from being a small Bitcoin miner to one where it continues to mine Bitcoin on a very small way, but now its primary treasury asset is Ethereum. And in the ensuing 12 weeks, we've become the largest holder of Ethereum in the world. Today, we announced 2.8 million ETH tokens, which is, with the cash on hand, it's about $13.5 billion worth of crypto. And we do provide periodic updates on that.
Yeah, of course.
Yes. And but we've done this in a way that has been accretive to BitMine shareholders, because at the start of this process, there was about $4 of Ethereum per share. That's when the announced transaction happened, and the stock price of BitMine was $4.50. And on August 27th, which was the last update, so we're due for a new update, the stock had Ethereum per share of $39. So almost a 9 times increase, almost 10 times increase in those 8 weeks. We have since increased it again in the past 4.
The surge of institutional capital into Ethereum in 2025 marks a turning point for the broader crypto landscape. Bitcoin continues to reign as digital gold, anchoring investor confidence with its store of value strength, while Ethereum is increasingly viewed as the infrastructure layer powering the future of finance. With billions flowing into Ether ETFs and growing adoption across tokenization and decentralized applications, the network is transforming from a speculative asset into a core financial utility. Together, Bitcoin and Ethereum are defining a new era of digital capital, one built on transparency, efficiency, and decentralized trust, signaling that the foundations of global finance are shifting permanently toward blockchain-driven systems. Do you think Ethereum's growing institutional adoption and ETF inflows could eventually allow it to challenge Bitcoin's dominance in the global crypto market? If you found this analysis insightful, share your thoughts in the comments, spread it with fellow crypto enthusiasts, and don't forget to subscribe for more updates on Bitcoin, Ethereum, and the evolving world of digital finance.